Hello, I'm Robert and welcome to my channel, where I discuss everything automated algorithmic trading or simply algo trading. Today is going to be a wonderfully fun day because we're going to talk about both the cryptocurrency markets and the Forex markets. And I'm going to introduce the next module within the Jackrabbit TV series. If you want to know more about Jackrabbit TV, please join the support server or my Patreon, and the links will be below. So let's get straight into it and straight into the charts. We're going to start with the Forex market, and I'm going to reveal all of the various modules. Now, volume is something that you need in order to be able to get into and out of the market. Without volume, you don't have liquidity. Without liquidity, you're not making money. And to be very blunt about it, the whole point of trading is making money. So you have to have volume. And that is a major underpinning for any successful level of trading. The more volume you have, the better your opportunities, and the more likely you are going to be able to get out of the market at a profit with a good opportunity. So we have here volume. Now this particular volume chart is a percentage-based system that runs on the course of X number of days, finding the highest of the highest within those days. In this particular case, I am looking for a market with a 90% volume candle. That's important because I want to actually purchase when the market goes above 90% volume for the last 37 days. And that's this area above the blue line. Those are the areas that interest me. But as you can see from the chart, overall, the volume is very generous. That is critical. Good volume means good opportunities. But there's a lot of different ways we can look at volume. Rather than a fixed percentage, we can also look at volume as a moving average. So let's bring up the settings and look at what we can do. In this particular case, I have my volume threshold at 93%. So I only want opportunities when the volume is 93% of the last 37 candles. And of course, these numbers are completely changeable. But what if I want a moving average of the volume? Well, we can do that just by setting it to 0. And the volume will then be calculated as a moving average. And we have different styles of moving averages we can use. We have different levels. For example, this is 37 candles. We can go through a whole different array of potential possibilities and actually look at what happens when we go higher. Let's go for the last 200 candles. And you can see how the market flattens out. So there are a wide range of things we can learn about this market. Looking at the entirety of the market, we can see just how the market has smoothed out. And we can see the points where volume is above the moving average. Nobody wants to buy when there's no volume. It's just a garbage market. And garbage markets don't give good opportunities. So when you're looking at volume, it is critical to understand that you always want the best of the best, which is why I chose to go with a volume of 93%. So let's reset the volume back to 93%. And I'm going to reset this back to, well, actually, let's leave it like this. And let's go back to the main chart. And even with 200, we can see that we have one trade. So that is really, out of the entire market for Euro USD, we have eliminated everything down to one single trade. Let's see if we can find it and see what one trade with 93% volume looks like. Well, that's quite nice, actually. It gets into the market. The green line is the take profit. The red line, in this case, because of the way I am using my DCA module, is actually a stop loss. I've set the DCA module up to only allow a maximum of one position. So it acts as a stop loss in this case. And we can see how the market purchased and went down and closed. Okay, now if we're done with the software updates, right in the middle of the video. So here we are looking at the trend, and we can see just exactly how it played out. And we have only 93% trade opportunities. So we got in at the perfect opportunity when the market yielded a good level of volume. Absolutely critical. Now this indicator is in the Jackrabbit TV alpha area of the support server. That link will be in the description below. So check it out and let me know what you think. It's a wonderful indicator, and it does an incredible amount for finding opportunities. But it's not just cryptocurrency, or excuse me, it's not just Forex, but it does well in cryptocurrency as well. It's a remarkable tool. So now let's change this to more opportunities and see how many opportunities we get with this particular setting. I encourage you to play with these numbers and really look at them because they are exceptional. And in this case, we have a total of 4 opportunities with only one purchase per cycle. So if you're looking at a way to really hone into the market and get the best and most liquid points, this is the absolute best way to do it. You will get a wonderful level. But let's move to something that is a little more interesting. Let's move to the Bitcoin market. And that has been quite something. We broke the all-time high of 93,000. And now we're in the 91s, and we are doing exceptionally well. And here we have volume again. And you see where I've gone onto the chart. Now I made a few modifications to this DCA where I let up to 10 positions take place. but still, it is a wonderful prospect. And for this particular run, I've got my volume set to only allow one position. Again, 93% again. Getting those opportunities. But the thing that's important here, that really stands out between both markets, is the level of volume. For example, we see this volume on this chart. And if we switch back and forth, you can see the differences in volume between Forex and crypto. Holding does not equal trading. And what you're looking at is active trading. And that is the difference. Here you see more volume. This is trading. Aggressive trading. This is what drives this market. The cryptocurrency market is driven primarily by holding. So your opportunities aren't going to be as good. That's not to say that they're not there, but they're not as good. And that is critically important when you look at the unusual level of volatility that exists when the cryptocurrency markets take place. Let's set this volume to a moving average. And we could see just how much it changes the entire dynamic. And it still does exceptionally well, even if you're looking for more aggressive trading with a dollar cost average approach. Volume still works well with an average of 2 positions and a maximum of 4. So you can easily trade in a way that causes you to mitigate a huge amount of risk. So let's look at this market. Actually see where, okay, we can see just how aggressive it works. Now this is using my classic moving averages. But you could just as easily use the optimized trend tracker, the module that I introduced the last time. And we're going to demonstrate that in a few minutes. This is how you make money. Through accumulation, through tracking when to get into the market with volume. Being able to understand how the market really saturates out is critical. So now let's hide the moving averages. Highlight the trend tracker. And let's change the information that volume gets. Signal line. And you are automatically going to see a big difference in how the market fluctuates. Okay, let's get to the end. And we see with the optimized trend tracker, we have an average position of 1, but we have a maximum of 3. But the number of trades is significantly higher. We went from 4 trades to 14 trades just from a very small change. And of course, if we change how our volume is actually tuned, that is the duration of our look back, or if we change our time frame, or if we go into a confirmation, for example, the 1 minute and 5 minute. And yes, volume does allow that. So let's come down here. Confirmation bias is set to yes. And confirmation time frame, we will set to 5 minutes. And now we are looking at both the 5 minute volume, that's the bottom part, and the 1 minute volume, that's the upper part. So we can clearly see just how well this plays out together. Now we can use 1 hour, we can use 4 hours, anything that you can think of for your volume. Let's go ahead and set this up to, let's go with 1 hour. And you'll notice how the confirmation bars change. That is 60 bars of the upper volume is 1 bar of the lower volume. Now that works out because we're on the 1 minute chart and we're looking at a 1 hour confirmation. But it works the same if you're on a 1 hour chart and you're using a 4 hour confirmation, then you're going to have a different ratio. But you still see how well things work out. And you also see how the entire process pulls together in such a way that you get opportunities. Now we are on Binance, of course, the most aggressive and largest exchange in the world. So the liquidity and volume is quite substantial compared to other cryptocurrency markets around the world. Let's get rid of confirmation. And go back just to the 1 minute chart. Now this does work on higher time levels. For example, we can go to the 5 minute chart and we will get a volume regulated to 5 minutes. And of course we see just how well this puts together. Let's go back to a 93% threshold. That way we get only the best of the best. And I actively encourage you, play with these numbers. Get them to your particular risk assessment. Just because I like such a limited market doesn't mean necessarily that it's going to be appropriate for your trading style. But I like to really narrow in on just very specific areas. That way I can trade more than one asset and not over leverage my account. But that doesn't necessarily fit every single person. We can see here that I am now at 9 trade opportunities with 1 position per opportunity. This works in my favor. But let's go through and look at the market from Kraken's standpoint and see the difference in volume and liquidity for other assets. Okay, I am on the Kraken market now, and we're going to start with Cardano. We can see from the right-hand side the statistics that I am currently looking at for this trade using the dollar cost averaging approach. And we can see at the bottom the volume of the market. Now, from the standpoint of the cryptocurrency markets versus the Forex markets, remember that you're not going to get the level of volume here that you are in the Forex markets. So your thinking process needs to be slightly different if you trade both markets. So let's begin going through and looking at some of these assets. Here is Cardano against the US dollar. And we will see Cardano versus Tether. Now, interestingly enough, in this case, Tether usually has more trades than the US dollar, but for this unusual reason, there are less trades but more accumulations. So it's an interesting dichotomy when you compare the markets. And you do need to compare each market carefully, because even though it's the same quote currency, or excuse me, the same base currency, because of the differences in the quote currency, that is the USDT, it affects the market when you compare it against the USD. Even though USDT is pegged against the US dollar, market dynamics are very different, and that shows up in the volume. It shows up in the opportunities you have available for trading. So you always have to look at those considerations when you use volume as a metric part of your trading. So let's move on to the next pair. And we are going to see that some pairs do good, some pairs don't. Now, the idea of using volume is to limit your trades, to give you opportunities that have the best case situation to improve. And that doesn't always come easy. Here, Atom is a wonderful opportunity in that it had 7 completed trade cycles. So it had a large amount of volume, but you can see that it also had some accumulation, which isn't bad. For example, it took in a maximum of 2 positions per cycle. That's reasonable, as we can see on the chart. So understanding the dynamics of your market is absolutely critical. Bat. What a nightmare coin this is. Brutal, aggressive, and with the right strategy, incredibly profitable. But again, volume is relentless. Now, what to pay attention here is that this market took 223 days to make 3 successful trades. That tells you straight away that the volume is very weak, very limited. $200 for 3 trades on the 1-minute candle should tell you everything about this market. It is not a market you want to be in if you want liquidity. You will see this theme quite a lot when you're going through and looking at different circumstances. And you will begin to be able to correlate which assets are good investments versus the ones that are just hideous. Bitcoin Cash, 48 days for 2 trades. Not a good turnaround if you're looking for a lot of volume and movement in the market. Now again, this is on Kraken. Your exchange is going to be different. Check your exchange carefully. Go through and investigate every single asset on your exchange. Look at the liquidity. Look at the volume. See how it correlates against a process of opportunity. Not every opportunity is worth taking. And some opportunities will leave you holding a situation, quite frankly, you don't want. Even as we look at Bitcoin on the Kraken, Binance had 14 trades to Kraken's pathetic 3. That alone should tell you just how low the volume and liquidity is between Kraken and Binance. Kraken does not command the level of trading Binance does. Volume equals opportunity. In this case, low volume, less opportunity. And this is probably one of the most visual and best representations of that. Always look for high volume, and then always trade high volume. This way, you're going to get the opportunities that will give you the best profitability. Now, for the DCA that I'm using, it's my standard 2% take profit, 1.5% deviation, or if you're only using one position for your DCA marker, then that deviation becomes your stop loss. So we see here, opportunity, high volume, we get in, we get out. That quick, because that is how volume works. It got in, everything lined up perfectly with the trended tracker, and we got out. We made money. And we did this 7 times. Now CRV is a difficult coin to deal with because it normally does not have a volume. But if you have the appetite for this kind of volatility, this asset is quite remarkable. So volume gives you an opportunity to look at assets that are normally not worth trading. But you need to go through and look at the market you are in. And as we look back at CRV, we can see some markets are less than favorable but still profitable. As we examine the volume, we can see just how that plays into the overall market dynamic. And as we all know, sooner or later we're going to get to my favorite coin, or at least favorite. But for now, 411 days. What kind of a market do you have to be in to wait 411 days for 11 trades? This market's volume and liquidity is clearly not that great. The profitability is great if you can stand the waiting. But still, that's less than a trade a month. And that is, unless you've got a very deep wallet where you can really get into the market, it's not a good market to be in. So take and really look at your market dynamics. Look at the chart. Look at how long the durations are. Plan carefully. And now, it wouldn't be one of my videos unless we visited my least favorite asset on the planet. The one that's cost me more money than I ever wish to amount or admit. And yet, I would trade this. I would probably regret trading this, but I would trade this. 20 days, 5 cycles, 1 position. I would take the chance on this. Despite the difficulty of this asset, it does have the volume and the liquidity to support some very nice trades. And these are really good opportunities. So even the more difficult landscapes can be profitable if you have the right tools. And this particular tool took me close to 2 years to get working right. This has been one of those I've been wanting for a long time to have to my arsenal for Jackrabbit TV. But in order to get it to this point, 2 years of testing. Because volume is a difficult thing to test. Nobody wants to purchase on low volume. So all you ever really have is one signal. And you have to figure out how do you turn that one signal into a buy or a sell or possibly both. So it takes time to get these strategies right. And I owe that to my patrons who have helped me by covering the expenses necessary for me to be able to continue this research. This kind of strategies don't come easy or cheap, unfortunately, especially when it takes a year in active development or more to actually get it up and running properly. So to all of my patrons and sponsors, thank you. This is one of the many modules you have made possible through your dedication. So as you look and you work with this module, again, it is in the alpha area of the Jackrabbit TV grouping on the support server. Leave your comments, share your thoughts. Let me know what you think of volume. How does it put together for what your assets are, for what you like to do? Let me know. Give this video a like, subscribe if you're not subscribed, ring that notification bell if you want future videos like this. Please share your thoughts, leave a comment. Thank you for watching.